Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Andrew has a follow-up question. First of all, two questions. How do you set your strike prices? Which I assume if it's a straddle, you're looking at the money kind of thing. As you pointed out, you can do deltas positions also. Strangles, what strike prices, and then a second question is at what deltas. And I guess that sort of gets back to if you're creating straddles or strangles with delta, why? Why would you do that?
Okay, typically we don't use the ISE FX options for condors. I'm usually more directional, longer term when I'm using these. But when we do use an iron condor as an example, one thing that we do at Know Your Options in one of our managed money portfolios, general rule is that we're looking for a 7 delta on the short strike prices. And as soon as the 7 delta, or -7, depending on whether it's a short call or a short put, as soon as it becomes a 25 delta, that's our red flag, and that we'll make an adjustment, we'll get out of the trade, we'll do something. That's kind of how we stop the bleeding, so to speak. That's our general rule on the iron condor side of it.
Oh, that makes sense. That makes sense. I mean, that's just an embedded stop loss, sort of, if you will, correct?
Right, and it's usually far enough out of the money to where we don't have to stare at the computer constantly and do it that way. But that's typically how we view a condor. It's usually we go far out of the money, but we avoid becoming the arrogant condor trader from the standpoint that once it hits the 25 delta, that's our red flag in which we make an adjustment. So we don't win every time, but we try to not lose. We do our best to avoid the big one, so to speak.
That makes sense. Let's see if we can find any other questions. Mike, your presentation was great. I love how you included not only what a straddle and a strangle is, but the idea of how important Vega is. Because as you pointed out, you could think that the market's going to do something. I think we always sort of think that, but it's a matter of what you pay for that something that really matters. Would you mind commenting on that?
Well, absolutely, and it's all about supply and demand, because if the whole world believes that YUK is going to go higher or lower, meaning that the whole world is thinking that there's going to be a big movement, then prices are going to be a lot higher on those options, because the natural thought is, oh, I'll buy a call and a put because I know this thing's going to move a lot one way or another. Well, you're not the only one that's thinking that a lot of times, and maybe you are, and if you are, then volatility would be lower and it could be a trading opportunity for you. But with that, options are priced, and options are pretty efficient in how they're priced. So with that, you pay for what you get.
That's a good point. Charlie wants to know if there's a good book on FX options. I guess that's a question to me. John Yeagerson, I believe, tradingmarkets.com. He might have some material there. I would urge you to go take a look at tradingmarkets.com. John's an excellent resource. Not sure, because FX options is relatively new. I guess you could lean on some of the Nattenberg book, the Macmillan book, but the one difference would be that you don't have dividends here. You have an interest rate differential. In fact, we found out how important the interest rate differential is today when the Australian central bank increased rates. So they're increasing that interest rate differential that put a lot of pressure on the dollar. And Mike's actually going to have a chapter on it in his book later this fall, so that's great. Mike's, he's an author, and I've read some of his stuff. Very, very good. So, wait for Mike's book coming out soon, and hopefully you'll purchase it and learn more about FX options. Let's see if we have any other questions. I'm getting a lot of comments about the slides. Are they available? You'll be able to catch these slides tomorrow at www.ise.com/archive. So you could listen to not only this presentation, but Mike has done others, as he said. So you can go back and check out the archive. So I'd urge you to do that. Let me see. I'm going to give everybody another moment or two. Have any other questions? One thing I found interesting, Mike, I'm going to give everybody another moment with questions, is that, we woke up this morning to the dollar getting absolutely crushed. But I looked at the FX options market and was surprised to see that even though the dollar is getting buried, in most of the currencies, that the volatilities are not anywhere close to where they were last March. So the British pound is trading around a 12 vol when it was as high as 17. The Australian is trading around 16 when it was as high as 22. The euro is at 11 relative to a 16 high. The only one that's close is the yen and the New Zealand dollar. That's relatively new. So I was surprised that there isn't as much fear in the dollar, especially although the yen is trading near its high. I've seen people putting quotes in the media saying that they thought the dollar might go to 80 or even below. I think if the options market, at least it hasn't filtered into the options market because the volatilities are nowhere near where you'd expect in a panic. And usually when you see a panic, you see higher volatility. Did you check that out, Mike, in the last couple of days?
Haven't had a chance to look at that so much per se, but I think another interesting point to kind of add on what you're saying is you're mentioning volatilities of how, it was way high back when it was at 17. And I think this shows how this is just a different animal in terms of a product as opposed to the stock market when a lot of volatilities were, when they were way high, they're up in the 70 and 80 range. So with that, big movements in currencies like AUX, the Aussie dollar, that's one to where it went down $1.61 today. It's down 1.5% on the day, and that I shouldn't say it went down. The U.S. dollar went down $1.5% approximately, and that's a big day in the currency world. So
right. That's a great point.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.